cyclical because of the challenges of 2008. After that, the paralysis of decision making in UPA 2. And after that, what is happening is the bank, there's a twin balance sheet challenge. The bank had no liquidity, had no capital adequacy, and the borrowers had no appetite. So that's the cyclical impact. But some say it's a structural impact. And the structural impact means what we have done in the past, whatever inputs have gone, the ingredients gone in the past, may not work in the future. So you need to really restructure the entire inputs now that you want to put in the economy. And you said one of these inputs that you talked about is the development banks. We passed through the phase, as you were saying, Survi, we passed through the phase where we had development banks. I worked in development banks, and those failed. And then what some smart guy said, why don't you give public sector banks to lend long-term projects? Public sector banks were only used to funding working capital. From a working capital, you are going to fund a long-term project, you need to go through that curve of learning. You need to have that understanding of the projects. I think the failure happened there. And therefore, whoever had the understanding, be the SBI cap or X and Y, everybody tagged on with that, and then we are saddled with a whole lot of problems today where we are.
Yeah. You said about, banks or development institutions. I think that's less of an issue. They are just delivery mechanisms of how you transmit credit to the ultimate borrower, so you can call them any names. I think there is a much more fundamental issue that we have to settle. The fact that we have a problem of this magnitude, where 11.5% of our assets are non-performing, means that there is something that we've been doing wrong perpetually. And the Indian financial system, even though we are today a $3 trillion economy, is not something that is known for innovation or is known for leading the curve in terms of its thinking. Makes us think that obviously we have a problem and something that we've been doing perpetually wrong in the way we go about financing our businesses, our economy. And we can call them different things, as you said, at different times in our history we've called them, but we always end up at the same problem.
And I come, earlier part of my career was into administration of direct taxes. So I have at least some understanding of the consumer behavior also. See, India is really diverse. There is no doubt about that. No country can be more diverse than us. But in this rainbow, there is also a sad part, and that is the disparity which is there, existing disparity. So we have a large population where social infrastructure is yet to reach, whether it's healthcare, sanitation, water, and reliable energy, including the electricity supply. Now, obviously improving the datum line for such a large population is going to take many notches of the development parameters which we have. But at the core of this building, nation building, is obviously the infrastructure. And we all know, I don't have to say because everyone is expert about its multiplier effect on economy, livelihoods, and the communities also. The other alternative which we have been following for those people who are below the datum line has been the use of subsidies and direct benefit transfer, etc. But this should be only transitory. The problem is, we as a nation, whatever is introduced as a transitory, as a bridge, we take it and cling to it, and our aspiration is to become a developed nation based on these bridges, which have to be, we have to burn the bridges after some time.
The topic is a very interesting one, and I think the panelists that have spoken before me have touched upon one very important factor which I should also reinforce, and that is that when looking at any investments in any sector, you have to look at the viability of those investments. And I think right now one of the big concerns that we have is that irrespective of whether it's a DFI or a bank or some other kind of investor, as long as the viability of investments in the sector is not strong, nobody is going to want to invest. And if they do end up investing through some compulsion or the other, then also you will find that those investments will not turn out very well. And then whether it's a DFI or any other institution, they're going to end up turning sick or they'll require government support, and that will not be the intention with which anybody wants to go down a certain path. So I think it's very important therefore to look at the viability of any sector, and since we're talking about long-term financing for infrastructure mostly, I think we're looking at infrastructure financing. Within infrastructure financing, one of the most critical things, especially because all of the DFIs or anybody who has to finance infrastructure has to do it for a long period of time. In most infrastructure investments, the underlying instrument is the contract between whoever is the long-term payer under those, the buyer of that infrastructure and the provider of the financing. And if those contracts don't have sanctity and legal validity for the period for which you want to raise financing, then in fact what will end up happening is that all the investments that go into the sector are going to turn bad.